everyone, and thank you for joining. My name is Rory Johnson, and I am an Area Vice President in the on-premise Applications Unlimited organization. Today, Tim Marico, Senior Director of EBS Applications Development, will show you how Oracle has addressed challenges relating to equipment leases and the new lease accounting standards with the EBS suite. Today's presentation, you will learn about the new IFRS 16 and FASB ASC 842 standards. Understand the impact the new standards has on your balance sheet, and you will also find out how Oracle has addressed these challenges for equipment leases with the eBusiness suite. In addition, you will hear about the innovations and opportunities for EBS training from Oracle University. Without further ado, I would like to hand it over to Tim Marico, Senior Director, EBS Applications Development.
Thank you, Roy. I'm happy to be here. As you mentioned, my name is Tim Marico. I'm responsible for strategy and product management for EBS Property Manager and a few other products. And today we're going to talk about IFRS 16 and equipment leases. Everything I got in the presentation is basically all release functionality. I do talk about some roadmap functionality at the end, so please take a moment to read our safe harbor statement. Actually, I have a lot to cover here. A few months ago, I think it was back in June, I presented when we first released our functionality around IFRS 16 and ASC 842, and that was primarily focused on the property side. Since then, we've released our functionality around equipment leasing, and so we're going to focus the presentation today on the equipment side of the house. Now, that being said, a lot of the requirements and the needs around the business needs, that's all pretty standard between property and equipment. It's as we get into the solution overview where you'll see some major differences between property and equipment. So I'll start off with talking about the overall state of the leasing, what's going on, the business needs around IFRS 16, ASC 842. I'll talk about how Oracle has solutioned this with the equipment portion. We'll then get into solution overview, and we'll talk about some transition method as well. I'll get into pricing availability. We'll talk about some general roadmap and any additional resources, really around the property side and if you're a lessor. So I think everyone's pretty aware by now that the new requirements with IFRS 16 and ASC 842. Primarily, the impact is to the lessees and tenants. If you're a landlord or a lessor, your accounting pretty much doesn't change. It's very standard under the existing accounting. However, if you're a lessee or a tenant, that's the main thing. That's the big impact. And the real gist of it is the lessees now got to start putting their leases onto the balance sheet, both as a lease liability and as an ROU. And depending on whether you're U.S. or outside the U.S., there's two different types of models. FASB and IFRS probably spent about 10 years working on these standards. Then, at the end, they sort of couldn't come to a complete agreement on everything, so they sort of agreed to disagree, and that's why there's two models. If you're following IFRS, they essentially have one model with U.S. GAAP. It can be either U.S. lease, it could be either an operating lease or a finance lease. So there's a couple different options there, which we'll cover. Now, when does this go into effect? I think we're getting very close. For public companies, it's an annual period starting in the beginning of the year. So we're just a few months away from this, and we're seeing a lot of that activity now with our customers. And if you're a private company, you'll start 2019, after 2019. So what's going on in the state of leasing, right? I guess almost 2 years ago, IFRS and FASB issued new standards. So the bulk of the time has been, okay, first interpreting the standards, what does it mean, kind of dissecting it, reviewing it. Then customers start really assessing the standards' impacts. What does that mean to their business? And now most folks are in that implementation of the standard, right? They've interpreted it, they understand what the impact is to the business, and now they're starting to implement it and quickly moving to starting to account for it. At a high level, what it really means is previously, before the changes, leases were off the balance sheet. They were typically just part of your operating costs. You just have a lease expense. If you had a monthly lease payment, it was just an expense monthly. There was no heavy accounting on the balance sheet. With these new changes, what we're seeing is the lease is going on the balance sheet. So your leased assets will go up, your liabilities will go up, your overall equity go down. From an income statement perspective, you'll see your operating costs go down, but your finance cost goes up because you got to start breaking out between your depreciation and your finance costs. The cash flow statement, you're really a net effect. No major changes there. It's just where you put it out on your balance sheet or on your cash flow statement. Really about a year and a half ago, we started getting a lot of calls in about what we're doing, what the impact is. Right? When it first came out, first, the executives want to know, hey, what's going to happen to my overall balance sheet? Right? What's going to be my financial position? What's going to be my borrowing capacity, my equity financing? What's going to be my earnings? What am I supposed to tell my investors? So they were trying to get an early head start on managing that impact and understanding what it's going to be to the overall company. Your controllers, you're looking at balance sheet. What's going to happen to the balance sheet, my income statements. What the projections that it's going to be over the next several years. How do I report in different models? A lot of international companies got to report under different models. All the way down to your lease administration, who's got to create these ROUs and liabilities, and they have to put this thing in operations. What's the portfolio value look like? So, the road has been, probably the longest pole in the tent on this road to compliance is, harnessing the contracts. Typically these were just, you procure a piece of equipment, then you create a PO for it, and you have the contract, and it goes into your filing cabinet somewhere, and, you create a monthly payment through AP. So trying to go through the companies and understanding where all of their contracts are at, how many they have, that's been one of the biggest impacts. From there, understanding what the policies will be. Okay, based on these contracts we have, what's our policy will be for treating these things? Looking at the impacts of that, looking at new systems, putting new processes in place on how am I going to account for these things, how am I going to get that information from the contract into the systems, all the way to the point of disclosures. So let's kind of drill down a little bit into the business needs. And here we start with a sample lease, right? We were a 48-month lease. It starts, January 2019. The payment is $8,000 a year. Part of that is service, part of that is rent with a rate of 5%. Now you see on top of the screen your pre-accounting chain. Before the accounting, your pre-accounting would look like was just an expense for $8,000 a year, and that would just reduce your net income. Now with the changes in new accounting, what we're seeing is you got to take that rent portion and do a PV of that. So you take your rate of your contract, you do present value, you come up almost $24,798, and you got to put that onto your balance sheet. So you're starting with that now PV amount of your rent. Notice you're not doing a PV of your service. That still stays as your operating expense, but your rent portion, you're going to do a PV of. But then you have to amortize that. So you do both your depreciation of ROU, you see that series on a straight line basis, and you take your interest expense. And it amortizes through, so you see your change to your net income on a yearly basis from your pre-accounting to the post-accounting changes. At the end, it's still the same, but just how it handles, on a yearly basis in this case is the impact. Now, from a high-level flow, there's major changes within the flow. As we come in, typically we took a sample, very high-level flow, right? You create a purchase request, create an RFQ, you select your supplier, you might see a lot of buyer lease, for example. You create your agreements, you create a PO, and then you create your contract. There's some very information about your contract you'll need how much PV, your calculation account for this. And also, as you do your accounting, you have to account for your ROU and your liability. Then at month end, you got to recognize your interest, your liability expense, and some key reporting takes place as well in your disclosures. So if I drill into these, as I create my contract, obviously I need to capture my asset information. If there's any changes to that asset, it's going to impact your contract, especially with equipment. With property, property doesn't seem to change too much, but when you've got equipment, you're talking about computers, mobile phones, those things sort of break, disappear, lost, stolen, right? So anytime you've got, a piece of equipment going out and another piece of equipment coming in, there's going to be a change to your contract. So being able to capture that equipment and that asset information is important. As you create your lease, you got to understand whether it's a finance lease or an operating lease, according to U.S. Versus IFRS, it's just one type. Or sometimes it's exempt, right? If it's a short-term lease, no value, it's exempt, and you don't need to report on it. Another important piece is your renewal options. So if you have maybe a 10-year lease with 2 5-year renewal options, if you're reasonably certain you'll execute on those options, then you have to include those in your amortizations and your PV calculations as well. So that's another key piece of creating a contract. And obviously currencies, handling these contracts in different currencies and knowing what currency it is and reporting on it. So as I create my contract, I have to then start accounting for it. The first piece is, I've got to create that ROU and liability, which is based off your PV, and use your cost of funds rate. So you got to be able to capture cost of funds and be able to use that. And then you have to calculate your PV of remaining payments. You got to determine your lease term. Lease term is relatively simple, but if you see a plan on exercising your options, you got to make that your lease term. Again, as I mentioned, any changes to your contract, if you have an ROU change, if you have an asset change, you're going to have to do an amendment on your contract, and then again, you have to recalculate and reassess your ROU and liability. And then to talk about accounting for these, you can account for these in multiple GAAPs, right? It can be in U.S. GAAP, could be in IFRS as well. And that's for each of the transactions. As I book it, as I amendment, as I renew it, terminate it, as I do payments, I do accruals, it's handling all that accounting. And then at the month end, you have to recognize the interest expense, depreciate the ROU, again, do the interest calculation. And we see different variations there. Some do it off actual, some do over 30 over 360. We see some things like a 445 or 454 type calendars as well. So be able to handle that interest calculation and those various options. And then at the end, reporting. Be able to report on the amortization, summary details, report details, short-term, long-term liabilities, and there's several disclosure reports that are required by both FASB and IFRS. So let's talk about the solution portion of this now. So Oracle has a solution for it. The base of this is around our property manager product. So we've had a property manager product out there in existence for a number of years. We've taken that product and built on top of that, used similar structures for that to build out the equipment piece. So you have Oracle Property Manager to handle your real estate if you're a tenant or a landlord. If you're a lessee, for equipment, we have the Equipment Property Manager with the Oracle Property Manager with the equipment functionality in it. And if you're a lessor, we have Oracle Lease and Finance Management. The focus of this is really around the equipment functionality. So how we've taken core functionality of Property Manager and extended it out to support the equipment functionality. So I want to start a little bit about the solution, really giving the focus of what we're trying to do with it. The whole objective of this is to provide lessee accounting for equipment leases. So they aim not to be a complete servicing system for your equipment. So, for example, if you're running a fleet of cars, we're not going to tell you when to take your cars in for oil change and when to take your cars out of service and get new cars in, right? That's not the intent of this. The intent is to be at least a lessee accounting system for your equipment. So we'll tell you how to account for your cars, but we're not going to tell you when to service them. Or, if I'm a fast food restaurant and the health rules say I got to replace my spatulas every 12 months, we're not going to tell you that, right? We'll account for your spatulas, but we're not going to tell you when to replace them and when to get new ones, things of that nature. So, what comes in nicely is that you have these existing systems that handle all the contracts and all the assets and, when to get your car oil changed and when to get it replaced. This would be a nice bolt-on for that, because you can just feed that information from that system to ours, and we'll generate all the accounting for you. So that way you don't have to rip and replace your existing contract systems. You can just bolt this on top of it for your accounting compliance. And we just capture key information. It's a relatively simple process to capture key contract information, payments, amendments, options, things of that nature that we need for accounting. So the scope of this is, from a lease administration, to, abstract your contract, and I say that, capture your key information about your lease details, what assets are on it, what your payments are, what your options are. We can generate the payments automatically into AP from there. So if I know I've got a payment every month, we take that payment and feed it into AP. And then compliance, right? Take that information and generate all your amortizations and accounting in accordance with IFRS 16 and ASC 842, as well as do reporting on it. Now, it is part of Oracle e-Business Suite, so it has all the sort of core integrations you would think of from an e-Business Suite. You have your common data models, your global architecture that supports multi-languages, multi-currencies. Within Property Manager itself, that's where we capture the terms and conditions and contact information, the assets and where they're located at, the payments. We'll generate all the expense recognitions for your lease liability and ROU. And then we'll integrate with some core financials modules, primarily subledger, right? So we take that information, feed it to the subledger. That way they can do the accounting in the subledger and the general ledger. Obviously with TCAs, where we capture who the lessor is and supplier, particularly the supplier details. We'll pay leverage AP for lease payments and your payables management. And then all the reporting on top of that through your general ledger and financial reporting. So just a bit of a solution overview before I get to some of the screenshots. The first thing we've done is we captured an interest index. So that's essentially your cost of funds, and that's the rate that you use to do the PV calculation. And you can capture multiple indexes based on, within an operating unit. You have multiple operating units, and each operating unit can have multiple interest indexes or cost of funds. You may have a short term or a long term. And then as you create your lease, you identify whether it's an operating lease or a finance lease, if you're in the U.S., or not applicable. And then you select your index, your cost of fund index that you had set up earlier. That we'll use that to do the PD calculation. We'll capture asset details, what equipment it is. Then we'll capture the payment terms, how much is the payment, what's the frequency of it. And very importantly, is that payment to be included in the ROU and or the liability? So not all payments will be included. In the example earlier, things like service, you wouldn't include in your ROU liability, but your rent you would include. Things like tenant improvements, things of that nature, you probably wouldn't include into your liability, maybe your ROU. So that's a decision you'll have to make. Same thing with renewal options. You capture renewal options. You have multiple options. Then you have to make a decision what should you include into your ROU or liability. Once we have all that information, we have the lease classification, we have the payments, we have the renewal options, we have your cost of funds. We take all that information and we'll calculate your PVs, and then we'll amortize those over the life of the contract. We create the amortization schedule, and that's really the heart of the application. We'll then use that to generate all your accounting. So your ROU balances, liability balance that we calculate, we'll feed that into the subledger and general ledger with the amounts, and that will create your accounting. Then each month as you run your accruals, we'll take your RU depreciation, your lease expense, and we'll again feed that over into the subledger and general ledger as well. So that's the core heart of the solution. And then we'll base all reporting off of those numbers as well. So let me kind of walk you through some of the setups here to start with. Here we see where we capture our index rates, essentially our cost of funds. And this is, as you see, set up by operating units. So I have one business efficient services here. And you can have multiple rates per operating unit. So I can have a long-term and or a short-term rate. I can have as many as I need. And then if I click on, for example, the long-term rates, I can capture the different rates. And here you see, in this case, my rate is increasing every year, starts at 4%, 4.1, and so on. The reason the dates are important, is I create a new contract, we're going to use the effective dates of the contract and the effective date of the interest rates to determine which rate to use, or if there's an amendment and I have to regenerate it, we use the effective date of the cost of funds that's applicable at that point in time as we regenerate our RU and liability. So that's one of the key setups. Then as I go and create my lease, so now we're in the lease creation pages here, right? We have really just 5 tabs. It's my general tab, what parties are on the contract, what assets are on the contract, what's my payments, and what's my options. So there's not a lot of information. Again, they're organized by each of these. So this is my lease detail screen, where I can capture my lease number, lease name. We have some templates of default, who the lessor is. This is where we identify whether it's lease classification, operating lease, finance lease. This is the index rate that I set up earlier. Again, I can then select that and apply it to my contract. We have the commencement dates, execution dates, termination dates, some basic information on the lease details. We have the parties on the contract. We default to lessor. We default to lessee from the prior screen. You may have some other parties you need to pay, right? Maybe you have one that you're paying for just the rent. Maybe you have another party that you want to pay for service, another party you want to pay for insurance, another one for maintenance. So you capture multiple parties and pay each of them as well. And then we get into the assets. This is my asset summary screen. I will give you some flexibility here with how you want to capture your assets, because there's various ways to do it, and especially with equipment contracts, right? They can be a little bit more complex, a lot more assets. Properties are pretty easy, right? One big piece of property. But with assets, you may have heavy machinery where you want to capture each of them individually. In this case, each one of these, each line has different units. Or you may have some other pieces of equipment like computers where it says, you know what, I've got 100 units of these. I've got all the same laptop model, and I got 100 of them. And so I don't want to capture all 100 of them individual lines. I just want to capture the number of units. So we give some flexibility there to say, okay, I want to do 1 unit or I want to capture multiple units. Then as I drill down into it, this is where we actually create the assets. So we capture your asset description, your model, the number of units, and you do have the ability to identify the serial numbers for each unit. In this case, I've got 5 units. I can capture the serial numbers for each of them. That's important, as you're got your equipment, maybe a piece of it gets damaged. When your computer gets damaged, you want to remove it from the contract. You know which ones you want to remove from the contract. You capture the address, install that site of it as well, which is important as we send the commission over AP for taxes. You want to know where it's located at, so you have the right taxing going on there. This is our payment screen. Here we can capture all the different payments. In this case, we capture payments for each asset as well. And you kind of drill into this. Then you can capture which asset the payment is associated for if you wanted to. You can capture different types of payments, whether it be rent, service, insurance, maintenance. You can define how your payments are. You have different starting dates, end dates of it, frequencies, different currencies. The important piece for accounting here is to understand whether that payment is included in your RU and or liability. So things like rent you would include in, that would get built into your amortizations, your PV calculations and your amortizations. If it's something like service, it's probably unlikely you would include that in your RU and or liability. Right, but we give you the options here. And that can all default for you based on your payment types and term templates. you can default them in. And also with options, you can have multiple options on a contract. If I drill into this, again, you can have the options down at the asset level, the frequencies. You can have different option types. It can be residual, it can be renewal, purchase options, early terminations, start and end dates, amounts. And again, a key from here is if you're reasonably certain that you'll exercise this option, you should be including it into your RU and your liability. Okay, that's how you create the contract. And once that contract's created, we generate all the we generate all the amortizations for it. So we'll create the ROU and liability and interest expense. For each period of the contract, we generate that information. And this is a sample of what it looks like. This is our lease detail report where we see all the lease information, the commencement dates, the calculation parameters, and then we see for both your IFRS and FASB, your periods, your liabilities, your cash, income accrual, ROU, all the information you would need, currencies, ROU, depreciation, expenses. Again, this is the heart of the application. This is what we use for all the accounting and all the reporting. And what I'm saying that is what we do is we take that information from the streams, that's my amount I want to account for, and we combine that with your contract information, which are your sources, and that's we feed that into your subledger, and then you use subledger accounting to derive your accounts. So we're giving you contract information with sources, the amounts from the streams together into the subledger to generate the accounting. Now, as we send this information over to accounting, we actually send both the IFRS and FASB information over, and then you can use your subledger, your accounting methods, your SLAM, to generate, do I want this to go into my primary ledger, what do I want to do to my secondary ledger, and you can have multiple secondary ledgers as well. So I can create my accounting for this according to IFRS, according to FASB, existing GAAP as well. So you can have multiple accountings for that one contract and one transaction. But we feed it all into the subledger, and then you configure the SLAM to generate how you want your accounting and your account derivation. And this is a sample of the accounting, right? So we can see one transaction, you got both IFRS and ASC 842 and debits and credits for booking. So one booking transaction under multiple representations. Okay, that's the basis of creating the contract and the accounting behind it. One of the key things is transitions. So this is a relatively new product, just released recently. So we don't have all the historical transactions out there. So we're going to go with a modified retrospective approach to calculation of your transition balances. So in the modified retrospective, we actually calculate your transition balances as of your transition date. So what you do is you'll capture your transition date, and we'll use that date for the balance creations, and we'll take any payments from that date forward, and we'll use that in the PV calculation. So your transition date is the 1st of January 2019. We'll take any payments from 1st of January 2019 forward and do a PV of those and generate the balances based on that. So there won't be any prior balances with this approach. Then that's the first step, is entering your transition date. Then you're in your transition program. It's called calculate and load balances to SLA. What that does, it takes all your balances calculated as of your transition date, uploads those to the SLA. Now you got your starting balances there, and then going forward, all your accounting will be based off the new standards. So that sort of transition date and learning that program is your key steps for the transition process. And then at that point in time, all the new accounting going forward. We'll talk about pricing and availability here. So the nice thing about this is, although this is released as part of the property manager functionality, as long as you have a financial license, you have use to this functionality at no additional cost. So again, although it's a property manager patching and functionality it's released through, it's available to all financial customers at no additional cost as long as they have the financial license. The patches are available. Here you can see the patch numbers. This is available under both 12.1.3 and 12.2. Documentation is available as well. So we're in the process of updating the user guide, but we put the information out there already. You see the doc ID for that. There's a couple of white papers as well about setting it up, as well as setting up the accounting. Probably the accounting is the most complex setup here. As long as you know SLA, you'll be in good shape. But we put that out in a white paper to help with that, because we understand that will be more the complex areas and complex setups. From a roadmap perspective, so right now our focus is on getting our customers live, right? We're a month and a half from some customers having to start being compliant. So our focus is getting those customers live. Right now we're not enhancing over the next couple months. We want to make sure the code is stabilized, customers are live, getting them successful. Next year we'll start looking at some enhancements on the product. We want to put a dashboard on top of this for both property and equipment. Lease classification tests, we want to automate that. Right now, it's you've got to do that through an extension or do it manually. We want to build that out there, and it's important for the equipment portion, right? Property is pretty much always an operating lease. It's pretty much always the same, but equipment gets a lot more complex. There's a lot more variability in it, and so we'll build that test out. And some more disclosure reporting. We've got some reporting out there. There's some more reporting we need to do. In the short term, customers can build their own reports off of it. Support for payments due after the 28th of the month. Property manager always had this restriction of the 28th of the month. We've got that solved for the equipment portion, so that's already available. We want to improve some of our proration rules as well. Flexibility on running accruals, around the operational efficiency side. Originally, when we first released it, you kind of run accruals at the end of the month. Now we've built some flexibility around that. You can start running them earlier. We want to make it easier to create and update your contracts. There are public APIs available for creation and amendments of contracts. And you'll see that a lot needed with equipment, because just the volumes of pieces of equipment. Again, with property, you just have one piece of property. It's pretty easy to do. With equipment, a lot more assets enter in. As I said earlier, they get damaged, destroyed, lost. So a lot more changes. So we've got public API to do that, but we want to put a web service or a web ADI on top of it to make it a little bit easier down the road. Also improve our user experience and improve some of our API validations. So last few pieces, I didn't touch on it much here, but if you have property that you want to cover as well, we do have a local property manager. Product's been out there for quite some time. We've enhanced earlier this year, again, to support IFRS 16 and ASC 842. But with that product, it manages your whole properties and space. You can do it for your lease administration, capture all your contract agreements. It notifies you any milestones. Can calculate your CAM reconciliation, your common area maintenance. It does index rents, rents based on variables, Excel forecasts, things of that nature, CPIs. And again, it covers both landlords and tenants. So if you're also a landlord, you want to do some billing into AR for your tenants, you can do that as well. And it covers all the compliance with existing GAAP and the new ASC 842 and IFRS 16. Again, it's based on the EBS product. So you define all your property, your building locations, for space assignments, capture all your contract information, all your terms. Then we'll leverage AP like we do equipment for your landlord details, lease payments, payables management. If you're a landlord, accounts receivables, you want to bill your tenants, and all the receivables are handled through there. Integrations with HR for employee resources, knowing where people sit, and space allocation. Feeding projects, the cost of projects, all built on top of reporting and general ledger. If you're a lessor, we have a solution as well. It's the Oracle Lease and Finance Management module used by some of the major lessors out there. Again, an EBS module, very similar, right? We capture all your core contract information in lease and finance management, all your asset information on your yields, again, receivables for billing customers, collections, AP for paying your vendors, and all type of reporting. Lease management, so the lessors are relatively untouched, so the accounting hasn't really changed. So that product, we're able to really handle all the accounting through configurations, and there's a white paper available for that product and how to handle the accounting for that. Information we talked about here is released. The release content documents are on the support side. There's online TOIs out there as well. There's videos that I've done in the past on the Oracle University subscription channel. So there's quite a bit of information on the support site that you can find about this. So that's pretty much all I had. Let me turn it back over to you, Rory.
Thanks, Tim. On your screen, you'll see a list of key contacts within the Application Unlimited organization who support only your on-premise license applications and are solely focused on the success of your EBS investment. Our organization can help you with licensing quotes, demos, presentations, help with support issues, and any other on-premise license questions you may have. Listed on the slide, you will see myself and my peers in the verticals and regions we each support. Matt Lee covers healthcare, higher ed, life sciences, high-tech, comms, media, and entertainment, as well as the central region that is not covered by any of the other verticals you will see listed on the slide. Then we have Michael Fabijanek. He covers top 100 financial services as well as the eastern region. And then myself, Rory Johnson. My team covers retail, CPG, and the western region. Please feel free to reach out to any one of us, and we would be happy to help. You can also reach out to Natalie Bianey or the license sales email alias with any questions, and we can get you connected with your license rep if you don't know who that might be, and we're happy to assist with whatever you might need. Also, I wanted to quickly address a couple of questions that have been popping up. One is, will this slide deck be sent out post-presentation? Yes, it will. Likely you'll see it in about a week and a half. And the contact slide here will be attached, as well as the presentation you're seeing today, the slide deck. Another question that's been coming up is, are there additional webinars, WebExes that are coming up covering specific topics? You can reach out to your sales rep or anybody on this contact slide, and we can give you an update on the upcoming presentations that are available, and also if there are additional presentations that aren't on that list, we're happy to help assist with any questions or demos or presentations you may need on some other areas as well. And now I'd like to hand it over to Chris Cole, Director of Oracle University.
Yeah, thank you very much, Rory. Again, I'm Chris Cole, Global Marketing Director for Oracle University, and thank you, Tim, for presenting this today. We have a lot of questions in here, so I'm just going to spend a few minutes talking about Oracle University and our commitment to helping extend our customers' business value with eBusiness Suite with training and certifications. So you will find Oracle University at education.oracle.com. You'll also find it on the oracle.com homepage by clicking on the Get Training icon. It's actually one of the most popular links for folks to go to, obviously to learn more about eBusiness Suite and all of the other Oracle applications and technologies that Oracle University supports. So now let's take a look at some of the training that Oracle University has for eBusiness Suite customers. We have a lot, and we made a continued commitment to work with Tim and the eBusiness Suite product development team to ensure that we have the latest, most relevant training for eBusiness Suite customers. And it covers several different formats to meet the needs of any of the different types of learners and what they need globally. So from traditional in-class training to live virtual class, which is essentially classroom through WebEx, very much like the technology we're using today. Training on demand, which is a recorded version of this class, so you can take it as you need over a 60-day period. You're not tied to a particular schedule. Custom tailored private events, so that meets the needs of your individual group. And then our newest innovation, the Oracle Learning Subscription, which Tim mentioned, and in fact he's one of the presenters in our learning subscription. So thank you, Tim. You can easily purchase individual courses, learning subscriptions at the Oracle University website, and you can also ask Oracle University to conduct a training needs assessment or demonstration of any of these courses and technologies for your organization. Now, if we look at the Oracle product learning subscriptions, there's really two ways to get this, to consume it. The first is the unlimited product learning subscription. So this is an everything Oracle product, so e-business suite, database, middleware, Java, any of those technologies that you need. Obviously, this group here is most interested in e-business suite, and we have a specific learning subscription for that. So it's available for an entire year for the individual named user any time of the day or night, and it has the latest information that you need to keep up to date and current. So in addition, with the e-business suite learning subscription, you also get those training on demand courses. So there's 58 of those courses that are part of e-business suite, and you get access to all of those with that learning subscription. So it really is a complete learning solution for e-business suite, and really excited to continue to partner with the e-business suite product development team to make sure that we're taking care of our customers. Now, what I want to finish with today here is just our contact information. So the Oracle University Sales Consulting Manager who can help set up that training needs assessment, discuss your organization's or individual needs for training, is Scott McGregor. That's me, Chris Cole. And then we have a couple of other folks that I've included on here if you have additional information you need about the product or certifications for e-business suite, and that's Diana Gray and Eva Chase. Now I'd like to turn the presentation back over to Tim and team who will help moderate any questions. We've come through the chat window, and I've seen quite a few. So thank you very much, Tim, and thank you, Rory.
Great. So, yeah, we've had Satya from our development team, one of our development directors. He's been monitoring the chat line for any questions. So, Satya, do we have any questions out there?
Yeah, a lot of questions, Tim. So I'll try to cover those that are repeating. And I think the licensing part is a lot of people have questions around licensing and the cost associated with this particular module. Could you please cover that?
Yeah. So as long as you have a financial license, you get this functionality for free. So it's released as part property manager. But as long as you have the financial license, you get this equipment functionality at no additional cost.
And then, thank you, Jim. And then the other question was, is this available in Fusion? Some of the customers are moving over to Fusion, and they would like to know whether this is available in Fusion as well.
Not at this time. They do have functionality with cloud assets that has some limited functionality. So you can take a look at that, see if that would meet their needs. But I don't think it handles some of the multiple currencies, things of that nature that you would need, that we have here. They have some functionality there through fixed assets you can take a look at.
Also, Tim, the question is around revenue leases. The question is, does this functionality support revenue leases today?
Okay, so if you're on a property side, right, you're a landlord, or you get revenue from that side of things, right? Property manager handles both revenue and expense from a property side. From an equipment side, this just handles the expense portion of it. And if you need revenue from an equipment lease, meaning you're the lessor, that's where Oracle Lease and Finance Management will come into play. So we do have a product for equipment for lessees or for lessors, for generating revenue from it. Those would be your major lessors. And that's a very widely used product by major lessors across the world.
There are a few questions around fixed assets, Tim. This sort of relates to it. Does this module have any integration or dependency with fixed assets?
No. We try to keep the dependencies to really a minimum to make it easier to release and easier to uptake and implement. So there are no dependencies with fixed assets. So really the only financial dependencies we have would be around SLA to generate the accounting, and if you want to send your payments to AP through that integration there. But we handle all the ROU amortizations ourselves.
There's a question on variable rent payments as well. How are variable payment contracts handled in this module?
Okay. Yeah, so within the equipment side, we don't handle variable rents through an automated functionality. You need to do an amendment and change the contract with the new payments. There's a lot of different ways customers calculate this. I also look after our work release and finance management side from the lessor perspective, and there's probably a dozen different ways lessors generate or calculate variable rent, and so we haven't built all that different types of functionality because it's not really standardized out there. So you have to do that through an amendment at this point in time.
A question on automation. How much of this data entry process is automated versus manual schedule creation?
We do have public APIs, so if you have all this information in a repository, or you've got a contracting system, or you have a place where you've been able to download this to, we can feed that in through the APIs and really automate that. So I think all they would really do is automate it in and then activate the contract. We also plan on down the road putting some web ADI on top of this to help with some of that as well. But we're going to have public API to do both the contract creation and the amendment process.
Do we have time, Tim, for a couple of more questions?
Yeah, I think a couple more, a little bit more time.
Okay. Can this module handle intercompany leases?
I will need to come back to you on that one. We'll follow up. Get the person's contact and we can follow up on intercompany.
Okay. There's a question on IFRS 16 through FCCS will also be covered. I'm not sure what that question was, but I think that is pretty much it for now, Tim.
Okay. Okay, great. If any other questions come in, we'll get them. We'll work with the host of this, and we'll make sure we respond to each of them. If we haven't gotten to any of them, we'll go back through them and send those out.
Thank you, Tim, and thanks everybody else for attending. If you have further questions, please don't hesitate to reach out. We will be providing a replay of the presentation, which will include the contact information that was shared earlier, and it will be sent out via email. Thank you very much, and have a great day.